Okay, let's unpack this. Have you ever looked at a company's financial report and felt like you needed a decoder ring? All those numbers, all those pronouncements, it can be a lot.
Absolutely.
Today, we're cutting through the noise to give you a clear, concise picture of what's really going on with a major player in the consumer goods space.
Exactly. We're diving deep into Emami Ltd's Q1 FY26 results for the quarter ending June 30, 2025. And this isn't just about, you know, revenue and profit figures on a page. It's about understanding the market dynamics, the strategic shifts, and, well, the underlying stories that these numbers tell.
Right. Our mission today is to highlight the most important insights from their recent earnings call, press releases, investor presentations, all of it. We'll look at the big picture financials, zoom in on key product categories, and even explore their future plans and challenges. By the end of this deep dive, you'll be well informed on Imami's current trajectory and what it means for the broader market. So let's start with the headline numbers. Imami's total consolidated revenue for Q1 FY26, it came in at 904 crores, which is essentially flat year on year.
Right, broadly flat. But here's the interesting part. While the top line didn't move much, the core domestic business, if you exclude a specific segment we'll get to, it actually delivered a pretty healthy 6% revenue growth.
Okay, 6% growth in the core domestic part.
Yeah, with 3% volume growth underpinning that. So there's underlying movement.
And despite that flat overall revenue, they managed a strong 9% year-on-year growth in profit after tax, PCT. That hit 164 crores. How did they pull that off? Flat revenue, higher profit.
Well, it really comes down to the margin story. Gross margins expanded by an impressive 170 basis points.
Wow.
Yeah, hitting 69.4%. And that was driven by two main things: an improved product mix, selling more higher margin stuff, and favorable input costs. Things just cost them a bit less to make.
Makes sense. So better profitability on what they did sell.
Exactly. Though it's worth noting, EBITDA, earnings before interest, taxes, depreciation, and amortization, that saw a marginal decline, down 1% to 214 crores.
Okay. And what about the bigger picture, the market context?
Management pointed out there's still, persistent pressure on urban discretionary spending. People in cities maybe aren't splashing out quite as much.
Still feeling the pinch.
Yeah. But on the flip side, they saw early signs of recovery in rural demand. That's potentially a positive signal.
Right, something to watch. Okay, so that's the overall picture. But here's where it gets really interesting, I think. The summer season impact. Their summer-centric portfolio, especially talcum powder and prickly heat powder, PHP, that category took a significant hit, right? What happened there?
It did. That whole category declined by 17% year on year.
17%? That's quite a drop.
It is. The core reason they gave was an unusually soft and shortened summer season. Basically, unseasonal rains. The monsoon arrived early. It just directly hit consumption. People didn't need as much prickly heat powder if it wasn't consistently hot and sticky.
Right, a direct weather impact. But we need context here, because that 17% decline, while steep, it comes off an exceptionally high base from last year, Q1 FY25.
That's absolutely crucial context. They had 54% growth in that category in Q1 last year. So dropping 17% from that high level, it's still significant, but not quite as alarming, perhaps.
Yeah, less of a collapse, more of a return towards normalcy after a huge spike.
Exactly. And if you look at it on a two-year CAGR basis, the compound annual growth rate over 2 years, the category still grew at a healthy 13%.
Okay, 13% over 2 years. That shows underlying strength.
It does. And for the entire summer season, looking at January to June 2025, the category actually posted flat growth overall. Management sees this as a, quote, clear reflection of consumer stickiness and a very strong brand equity. Even with bad weather, the brands held up over the full season.
So resilience is the key word there. Okay, beyond the summer woes, which parts of Amami's, more diversified offerings really shone this quarter? Where was the strength?
There were definitely some bright spots. The pain management range, for instance, grew robustly by 17%.
17%? No.
Yeah, and they directly linked that to the early monsoons. More dampness, maybe more aches and pains.
Could be.
And they expect that to continue doing well if the monsoon season persists.
Makes sense. What else?
Bora Plus antiseptic creams delivered exceptional growth, soaring by 60%.
60. Wow.
Huge jump. Navratna oil also showed resilience, growing by 6%,
Yeah.
which is pretty good considering the generally subdued summer conditions that might affect a cooling oil.
Right, holding its own.
And Zandu and Mentho Plus balms also saw strong growth, up 16%. So definite strength in pain relief and healthcare adjacencies.
That's a solid performance across several core areas. Were there any slower spots within that core besides the summer stuff?
Well, the overall healthcare range grew by 4%, which, compared to those other numbers, is a bit of a slowdown.
Okay, just 4%.
Yeah. But management described this as a one-off issue. They seem confident it's not a trend, and they're already putting initiatives in place to get that growth rate back up in Q2.
Quick to react then. Good. Okay, we talked about margins earlier and product mix. Innovation must be key to that. What new products or strategies did they roll out this quarter?
Innovation continues to be a big focus, absolutely. They launched quite a few things. There was a Dermacool prickly heat spray, new format there, a Navratna Ayurvedic hair fall control oil, specifically targeting stress-induced hair fall. Interesting angle.
Stress-induced hair fall. Very specific.
Yeah. And new variants, too, like Navratna Cool Talk Fresh Floral and a Boro Plus Icy Citrus Blast Prickly Heat Powder. Trying to keep things fresh.
Different scents, different sensations.
Exactly. Plus, some key relaunches. Navratna Gold got a refresh, and Zandu Roll-On was relaunched and rebranded as Zandu Roll-On Tension Gone.
Tension gone. I like that. Very direct benefit.
Right. And alongside product innovation, there's a big digital push. They seem to be really leaning into a digital-first strategy.
Yeah, you hear that a lot. What does it mean for Emami?
Well, they're launching exclusive innovations specifically on their own platform, Zandu Care. Things like Zandu Shilajit, Cool Rush capsules and resin, a Zandu Kanzawan Ayurvedic massager, and Zandu Chia and flax seeds. Products you might only find online initially.
Okay, so using digital for niche launches and maybe testing the waters.
Exactly. And it connects back to the broader strategy. Management explicitly said they're focused on leveraging existing brands through these innovations and relaunches. But they're also using digital, it seems, to explore completely new categories for future growth. It's smart. Build on the old, experiment with the new.
Right. Now, speaking of challenges, two other segments faced some headwinds this quarter. The male grooming range saw a 9% decline, and Quiche King, the hair care brand, was down 5%. What's the plan to turn those around?
Yeah, those are definitely areas they're focusing on strategically. Let's take the Man Company first. Despite that Q1 decline you mentioned, it actually returned to growth in June.
Oh, interesting. A turnaround within the quarter.
Seems so. And management sounded quite confident about sustaining that momentum. They talked about sharp positioning and a comprehensive brand revamp.
Yeah.
They also confirmed it's mostly an online play. 80% of its business is digital, and they expect its losses to narrow in FY26. So signs of improvement there.
Okay, so a digital focus and brand refresh for the Man Company. What about Smart and Handsome and Quiche King?
Right. For Smart and Handsome, the plan is to extend the brand into new male grooming categories. That's slated for the second half of this fiscal year, H2 FY26. It includes a full 360-degree relaunch of its brightening range. Management was pretty blunt, actually. They said the current Fairness Cream product is, quote, dragging down the business.
Wow. Okay, so pivoting away from fairness specifically.
Seems like it. They're aiming for a broader male grooming space, things like face wash and adjacent categories. A significant shift.
Definitely sounds like it. And Quiche King, down 5%.
Quiche King also has a major relaunch plan for H2 FY26. They talked about a new proposition, packaging, pricing, and product, all supported by a big 360-degree campaign.
So a complete overhaul there, too. Why the struggle, did they say?
They specifically mentioned increased competition from D2C direct-to-consumer players as a key reason. Those newer, often online-first brands are clearly having an impact.
Ah, the D2C disruption. We see that everywhere. But it sounds like Emami is fighting back with these relaunches.
Absolutely. And despite these current struggles, management's long-term view seems quite bullish. They described the male grooming category as very, very underpenetrated with a lot of scope.
So they see potential, even if it's tough right now. It's like they're investing now for future dominance in a category they believe will grow.
Exactly. Planting seeds for the future, you could say.
Okay, so we've talked products and brands. How is Emami actually getting these products onto shelves and into people's hands? What about distribution and their global reach?
Distribution is always critical in FMCG, you're right. They reported continued traction in organized channels. Think supermarkets, hypermarkets. Those grew by 6%. And the contribution or saliency of those channels improved by 190 basis points. So organized retail is becoming more important for them.
And what about the really fast-growing channels, like quick commerce?
Ah, yes. They highlighted quick commerce, the 10-15-minute delivery apps, as a strategic growth channel. apparently it's scaling rapidly for them, growing at nearly 3 times year on year.
Wow, 3x growth.
Yeah, huge growth. They see it as validating their omnichannel playbook being strong both offline and online. And generally, modern trade and e-commerce are doing well for their non-talc business too.
Good to see them adapting there. Now, turning internationally, that business delivered, well, modest 2% growth in rupee terms. It's about 16% of their total sales. Why so modest?
Yet 2% isn't spectacular, especially given the volatility and geopolitical uncertainty they mentioned. The main drag was actually Bangladesh.
Bangladesh.
Yeah, performance there was described as very muted, possibly even a decline. But here's the interesting bit. If you exclude Bangladesh from the international numbers, the rest of their international business grew robustly by about 14%, actually 13.6% to be precise.
Okay, that paints a very different picture. So outside of one specific market issue, international growth is actually quite strong.
Exactly. And they're actively expanding into new markets in Southeast Asia and looking at other new geographies too. So they're diversifying internationally as well, trying not to be too reliant on any single market. Smart move.
Definitely. So putting it all together, navigating some headwinds, strong core performance outside of summer products, big strategic shifts in male grooming and hair care, solid international growth ex Bangladesh. How is management feeling about the future? What's their outlook?
They seem reasonably confident, especially on the margin front. They said they don't anticipate any significant input cost pressures coming up soon.
Okay, stable costs are helpful.
Very. And they believe the overall macro environment will gradually get better. They're banking on a good monsoon continuing, inflation stabilizing, and that consumption recovery, particularly rural, picking up steam.
So hoping for some tailwinds from the economy.
Right. They feel the company is well positioned for sustainable and profitable growth. And they kept coming back to their key drivers: innovation, distribution expansion, digital acceleration, and cost agility.
Those seem to be the pillars of their strategy.
Pretty much. We heard directly from the leadership, too. Harsha Viyagarwal, the vice chairman and MD, emphasized the underlying strength and resilience of our brands. He expressed optimism for growth driven by, those factors we just mentioned: strong monsoon, easing inflation, maybe even interest rate cuts down the line.
And Mohan Goenka, the other vice chairman.
He underscored their sharp focus on profitability and operational efficiency, and he specifically called out being pleased with that quick commerce scaling, the nearly 3x growth year on year. Shows it's a key focus.
Right, and just yesterday, July 31st, the board approved these Q1 results. They also reappointed Mohan Goenka and Sushil Kumar Goenka as whole-time directors for another 5 years.
Yeah, signaling continuity and leadership.
And appointed a new company secretary and compliance officer, Ravi Varma, starting August 1st. So some standard corporate housekeeping, too.
And they've been getting some external recognition lately as well. Picked up 3 FIPSA Responsible Packaging Awards, a Silver Award at a CII National Circle competition. And interestingly, their Dermacool AI-driven ad was featured in YouTube's global Best of Advertisements list for India.
Oh, cool. So innovation isn't just in products, but marketing, too.
Seems that way. And this all comes as the company recently unveiled a bold new identity to mark its Golden Jubilee 50 years. So perhaps signaling a refreshed approach for the next era.
50 years is quite a milestone. Okay, so wrapping this up, what we've really seen is a company navigating a pretty challenging market, wouldn't you say? Mixed results overall.
Definitely mixed.
They clearly faced headwinds from that short, wet summer, which hit key categories hard. But the core business, if you strip that out, showed real strength. Especially pain management, antiseptic creams, the brand resilience seems pretty clear there.
Indeed. And it's fascinating, I think, how they're tackling the underperforming segments head-on. Male grooming, quiche king. These aren't minor tweaks. They're comprehensive relaunches, leaning into digital. Which really brings up a broader question, maybe for you, the listener, to think about. As consumer habits keep changing so fast, especially with digital channels booming and all these niche DTC brands popping up, how effectively can the big traditional FMCG giants like Emami adapt? Can they leverage their established brand equity and distribution muscle well enough to capture these new opportunities and fight off those nimble challengers?
That's a really great thought to ponder, especially as you look at your own shopping habits and the brands you choose. It's been a compelling look at how an established company strategizes and adapts in a really dynamic market. Thank you for joining us on this deep dive.